And the significance of this line is that it's a major point of resistance for this stock to break. If it can break it, then this is an extremely bullish signal that starts to get a lot of attention to this stock because this is what algos look for. Hello, everybody. My name is True Demon, and I'm the Devil's Stockbroker. Today, Troika has absolutely blown away my expectations, and I am so glad to be able to share with you the latest data and the short interest on Troika, ticker symbol TRKA. Without wasting any time, let's get straight into the Ortex data because this is the craziest part so far with Troika's investment. We'll get to the analysis in just a bit, but first I wanted to point out that despite the upward price action recently, Troika's short interest is still rising. Keep in mind that this data is typically delayed by 2 settlement days just due to the settlement process. So we should expect there to be some lag in this information. However, just by looking at the short interest percent of free float, we can say that definitively as of the last 2 trading settlement days, which brings us up to date as of Thursday evening, Troika was rising in short interest. So currently, the record shows the short interest percent of the free float is 77.89%, and the percentage of the free float that is on loan or borrowed, but not necessarily shorted, is 109%. So, literally, more shares than have been legally issued are currently borrowed in the market, either by a broker, market maker, or a short seller. According to the volume, which has exploded as of late, the days to cover is now down to just 1.34. We'll get to that in just a little bit, but the last piece of data that I wanted to share with you is that utilization is practically maxed out. It's at 97.93%, which is effectively the maximum. My threshold is above 95%. That's close enough to say that there's not really any available shares to borrow. However, as we've seen, there is a recycling or what is known as rehypothecating of shares. This is when a short seller borrows a share from somebody, sells it to somebody else, and then that person who bought that share from the short seller then lends it out to another short seller or another broker, market maker, etc., to then be shorted again. So, rehypothecation of shares is a real and very dangerous thing that happens in the market. It's not just with short selling, it happens in the bond market too, but that is neither here nor there. The point is that we're now at the point where the demand for lendable shares or borrowable shares is now so high that we are starting this rehypothecation process. And now, according to Ortex estimates, we have surpassed 100% of the free float being on loan. And then further to that point, we can see that the cost to borrow has now blown itself out of the water. So looking at this green line on this graph, you can see that at one time the cost to borrow was extortionately high. It's declined massively since October of 2022, but now we are back at a point where the cost to borrow is exceeding 195%. This is an annualized figure that you can take from the right side of this chart. The cost to borrow minimum shows that 195.07%. This is an annualized borrow rate. So effectively, this is the annual payment that short sellers would have to make based on their initial position. This is almost 2 times the amount that they would have to pay to take the position in. So if they borrowed $100 worth of stock, then if they held that position for a full year, they would actually have to pay around $195 just for having held that position for a full year. This assumes that this cost to borrow fee never changes and that the short seller maintains that position for a full year. This rarely happens, but that is just a way of visualizing the data and representing it in a way that you can understand so that you realize how much short sellers are actually paying to maintain that position. Now for the fun part where we actually get to analyze the technical charts for Troika. So this one has effectively formed a for certain bona fide cup and handle pattern. We have now established a level of support, and now it is prepared to make another move. There's been uh, alerts thrown by ScourgeBot over the last few days, this past in the previous trading week on Troika. Thankfully, Hell's trading floor got in very early on this play. Um, we actually could have gotten in much, much, much sooner, as far down as 16 cents if I had been paying attention. So I apologize for the late report on this as it currently stands. But as you can see, Troika has been having this repeating pattern of creating a big exponential growth curve and then coming back down to retest support. And every time it has this big spike, retesting support. Again, big spike, retesting support. Now, we haven't had a big aftermarket spike yet. This is just the trend during market buying. Notice that the spike occurs in after hours and then the price comes crashing back down to retest a level of support. So we haven't had that big spike. I'm expecting that we may actually see that as early as tomorrow morning. So it's possible that in pre-market we may see Troika just absolutely go and then come back down to retest that support. So what I am looking for is for Troika to make that big spike and then come back down and retest that support somewhere around the 200 daily simple moving average. That is this sloping yellow line that's coming down on my chart here. And the significance of this line is that it's a major point of resistance for this stock to break. If it can break it, then this is an extremely bullish signal that starts to get a lot of attention to this stock because this is what algos look for. A breaking of price that is breaking a major moving average is always a big signal of a change of trend. And this is what algorithms that use technical trading strategies for long term investment strategies will look for big moves. And classical traders do this too. As far as the fundamentals of Troika go, we're still waiting on what the word is from the company as to what their new restructuring of their debt looks like with Jefferies. There's been an ongoing discussion about how Troika is going to settle its debt, and they're working with Jefferies in order to make that happen. So we don't know what that plan looks like yet. That announcement has yet to come. But so far, the move that's happening in Troika Media Group suggests that now retail is starting to get behind this big surge of price action. It's got a lot of attention now, and as you can see just by the amount of volume that we've had here on the volume direction charts, we're starting to get some crazy volatility. One of the best parts about this particular stock that I actually like is that there's no options traded in this stock. And I have mixed feelings about options because for one, I love options. I love the leverage and I love the way that you can hedge your exposure and manage your risk with them. But I also dislike that they're so frequently used for a liquidity grab by big institutions and market makers. And it is a tool for them to manipulate stocks in ways that give them sort of a riskless return because they have the capital to move the market in a way that benefits them while they simultaneously sell options and pull liquidity away from investors on the retail side. And then they just move the market against those options positions and force them to expire worthless. So I have mixed feelings about options. And for that reason, with Troika not having an options market right now, there's no way for any manipulation to occur without just outright buying or selling shares. And right now, short sellers have run out of ammunition as of the last two trading days that we get our Ortex updates from. So, as far as we can tell, short sellers are now backed up against the wall. Max utilization, we are over 100% of the float on loan, and short interest is above 77%. That's an insane level of short interest. Now, options cannot become available for any stock that is traded on the NASDAQ until it is above $3 on its ticker price, and it must maintain that price level for, I believe it is a minimum of 10 days. So before any options market becomes available on Troika, that has to happen. As soon as the option market becomes available on Troika, I expect the price to crash, just because this is what's happened in Redbox and Revlon before when these two stocks were squeezing. The options market was restored on both of these tickers, and as soon as that happened, the price tanked. So that's an opportunity for a rug pull that I want everybody to be aware of. As soon as you see options become available, that's basically okay, now they're going to mess with it. It's time to get out. At best, buy puts, because typically what they do is when the price is up, volatility's up, they sell calls, and then they drop the market price. And then they take the money from the calls and they keep that premium. So as things currently stand, Troika's got a little bit of room left to go. We're going to see what it does tomorrow morning, but so far things are looking extremely bullish. I have not changed any of these lines or my trajectory arrow. Everything is still moving very much in the same way that I had already expected. And as you can see with the big gap up that we got in the market, Troika followed that move. And I'm expecting the Qs and the SPY to move up tomorrow as well. So I believe that the market will help assist in some lift from Troika, or the lift in the market will help assist Troika in lifting its own share price. In addition to that, we are expecting earnings to be announced any day now from Troika. I wouldn't necessarily believe that there is anything that's going to be crazy, um, crazy unexpected from Troika as far as their earnings goes. Although there has been some real bombshell announcements in the past where they surprise with a very unexpectedly good earnings report. This may just have been a one-off situation. It may not necessarily be a situation going forward, but we'll see. You know, any company can always surprise you. In any case, what I do expect from earnings once that is announced is a clear financial plan for the company moving forward, and that would be guidance. So, guidance will be important for this ticker going forward. That's really the catalyst that we're waiting for, is to see what their debt restructuring looks like, what their financial planning looks like, what their current earnings and revenue growth forecasts are, and what their cash burn rate looks like for the time going forward and how long that will last them. And that kind of gives us a timeline to work with for how the company can work towards profitability. If you're a long term investor, then that's news that you are waiting on. For the rest of us who are looking for a short squeeze, this is very important, because if all that information comes out and is extremely bullish and is extremely beneficial to the company, this will prompt long term investors to come into the company and then bet on it for a long term growth trajectory. It's very, very low capital. It is at an attractive price. And if the media industry is going to come back with a vengeance in the following year, or if it's expected to, which it is, then Troika Media Group could be one of those extremely cheap, low float penny stocks that uh, small and mid level investors will look to, or a growth company to put their investment into for the next 5 to 10 years. And if that happens, then that essentially just destroys a short thesis on this particular company. So anytime that happens with any heavily shorted stock, when you get genuine market investor interest that just comes into a company that's been heavily shorted out of nowhere, that can catch shorts by surprise. And just based off of the numbers that I showed you, with that short interest being well over 77%, that is going to be an extremely difficult position for those shorts to unwind. So it'll be much, much more difficult for them to get out than it was for them to get in. That's the situation that you look for a short squeeze. Troika is by far the best situation that I've seen in the market so far for a genuine, pure short squeeze. No options gamma, no funny business, just genuine turnaround in the company's growth trajectory and its financial situation. If all of those factors come to fruition, and we find that all of that lines up accurately with our expectations, then I have supreme confidence that this stock can absolutely squeeze. And it'll be so nice to finally see a genuine short squeeze play out once again. It's been way too long. I'm looking forward to doing many more of these in the future. That's going to be it for this video. Thank you so much for watching, and I look forward to seeing you in the next one. But until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and And I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.